On FOMC days, most traders get chopped up by volatility. But before the Fed announcement on June 17, I found 5 trade setup using order flow, market profile, volume profile, and statistics that gave me clear directional clues. In this video, I'll show you exactly what I saw, why I took each trade, and how the market moved from one extreme to the other before the news events. So let's jump right into the charts. Before looking at the trades, let's talk about the environment. One thing I observed after studying many FOMC sessions is that the market often moves from one extreme to another before the announcement. Volatility is usually elevated, traders are positioning themselves ahead of the news, and emotional trading becomes more common. Because of that, my goal wasn't to predict what the Fed would do. My goal was simply to identify areas where the buyers and sellers are becoming trapped and use those clues to find a high probability opportunity. With that in mind, let's look at the first setup. So the first trade was a VWAP bounce. Shortly after the open, the market begins moving lower towards the VWAP. At the first glance, it looks bearish. However, when I looked at the order flow, I noticed aggressive sellers hitting the bid, but price wasn't moving much lower. This one is my favorite signal. When traders are putting in effort but getting no results, it often means someone on the other side is observed pressure. As price tests VWAP, I saw the signs that buyers were stepping in. It gave me enough confidence to enter the long. The trade moved in my favor almost immediately. I scaled out of the 4 contract as the market moved higher, and I locked the profit. The remaining 2 contracts eventually stopped out, but overall the trail was positive. The lesson here is simple. Don't focus only on being aggressive, focus who actually winning. The second trade was a value area low plus low volume node. The price rotated lower into the value area low and the low volume node area on the chart. This is an area that I already marked before the session. As the market tested that level, I watched the order flow carefully. Again, I saw aggressive sellers, but once again, they weren't getting downside continuation. So the market was rejecting that lower prices. This is where understanding effort versus results become powerful. If the sellers are truly in control, price should continue lower. When it doesn't happen, that information is very critical. I entered a long again and used the structure low as my risk point. The market responded almost immediately and began to rotate higher. As the trade developed, I trailed my stop and let the market do the work. Now for the third trade, that was the opening print statistics. As the session progressed, I noticed that both the opening print stat and the overnight stat had not been fulfilled yet. Normally, these levels are frequently tested during the session. Since we were holding above VWAP, and buyers were showing strength, I started thinking that there is a chance that the market will rotate back towards the opening print and maybe test the overnight print too. I waited for buyers to step in, and then I enter above the breakout bar. What made this setup particularly attractive was the confluence. The opening print target aligned almost perfectly with the value area high. When statistics and market profile point to the same destination, I pay attention, right? This also completed the classic value to value rotation that many profile traders look for, the 80-20% rule. The market moved directly towards the target and completed the move. The next setup was probably one of the most interesting trade of the day. It was the initial balance reversal. When the market traded near the initial balance level, I noticed two-way activity. Buyers and sellers are interactive. The 1 minute chart show the buyers and sellers are fighting aggressively. But the 5-minute chart show something very important. If you look at the profile, you'll see we were trading in the high volume node. At the same time, I was looking at the heat map and I see the cumulative delta is suggesting that buyers are quietly absorbing the selling pressure, which basically created divergence. On the surface, the market looked weak, but underneath it, buyers were becoming more active. My expectation was that the value will begin shifting higher, and at that point, and the point of control will eventually migrate upwards. Once this is confirmed, I entered the long. The trade were exactly as I anticipated. The lesson here that cumulative delta can provide some clues if you combine it with market profile. Now, neither tools is perfectly by itself, but together it becomes a lot more powerful. Now we get to the final trade before the FOMC announcement. The trade was revisit the opening print. As we move closer to the announcement, price traded above the VWAP and moved back above the value area low. That changed the probability significantly. At this point, the odds favor another move towards the opening print. And I've seen this happen several times before in FOMC meeting days or FOMC announcement days. What I liked about this setup, that was multiple factor aligned. Basically, there's a lot of confluence. We were bullish. At least the order flow was bullish. We had supportive market profile structure, and we have a favorable time of the day statistics. Now, if you want to see more about the time of the day statistics, check out StatsTerminal.com. When we have that kind of confluence pointing to the same direction, that becomes a lot more interesting, right? I entered the trade and focused on managing risk. Rather than taking profit too early, I trail my stop behind the structure, basically behind every bar, and let the market continue working. Eventually, the price rotated back to the opening print and complete the move before the FOMC announcement. Now let's recap. Looking back at the session, the biggest takeaway is none of this trade required predicting the Fed decision, right? Everything was based on information that was available in real time, and you can also use statistics, and you can use the order flow to show you what's going on with the trader, who's winning the battle. The market profile show us where value exists, and the statistics identify likely targets. When all this aligned together, those were the opportunity worth taking. If you enjoyed this breakdown and would like to see more of real trade recap using order flow, market profile, and statistics, make sure to like this video, subscribe to the channel, and check StatsTerminal.com. Thank you for watching this video, and I'll see you in the next one.